Hey everyone, welcome back to another video. My name's Mercier, and in today's video I'm going to be bringing you guys a strategy which I've personally used past challenges after challenges when it comes to prop firms. So the most important thing is kind of understanding market structure, understanding institutional supply and demand, and just essentially understanding how probability works. Because I promise you, the second you can get a good understanding of what probability is, trading 50 times, 100 times, letting your edge actually play out instead of trading once or twice, seeing a loss, revenge trading, and then going into a downhill spiral from there. If you can actually just allow your strategy to play out, then you are going to make money. And the second you understand that, for me, I think everything changes. I'm going to show you a strategy which actually tends to have a very, very good win rate, which can be implemented very, very quickly. My best advice is understand market structure, understand institutional supply and demand, and understand liquidity. And the second you understand all of these, all the pieces of the puzzle are going to fall into place. You need to understand exactly what happens on the charts, because most people don't really understand the order book. Most people don't understand what happens at each and every single price value, how supply and demand actually affects the market, and why generally supply and demand is probably the best way of actually trading. Once you start looking at institutional supply and demand, everything will make sense, and institutional supply and demand is literally how price moves. And by understanding that, you're giving yourself a significant advantage over the people that don't really understand it. So the first thing I would do is I would kind of understand exactly where the trend is going. So for example, here we can clearly see on the 4-hour time frame the trend is bearish. Why do I know that? Well, let's have a look here. So we get a break of structure to the upside over there. So this is what I call a 4-hour break of structure. I'll mark that out to make everything simple for you. And this is this is our pullback, right? It is a 44.3 pip pullback. We can see that after price makes that new high, it then breaks this particular low. So what this indicates to us is that price has now turned bearish and price is about to start moving bearish. So what do we get? Well, we get a complete bearish move. We get a break of structure over here. We get a break of structure over there, right? And that is the bearish move for you. So all of this is a very, very big move, okay? Because this move is over multiple days. It's 14 days, 4 hours, right? As we can clearly see there. So what that really tells us is this: it's been the same trend over 14 days. Over the span of the 14 days, you would have had some very, very high probability sells. Let's actually go ahead and look at this. I'm going to jump onto the 15-minute time frame. Here's the break of structure. The reason this is not a break of structure is because on the 4-hour time frame, price didn't actually end up closing above. If this looks a bit weird to you, then that's the reason why. And we get price continuing to move bearish. Me personally, I use DR and IDR to base my trades. It gives us some very, very high probability plays. As soon as we get that break of structure to the upside, our understanding is that we're going to be bullish, okay? So let's wait till after this break of structure. So we see a 4-hour break of structure. We've switched bearish, okay? Right now, you have two options. You can either trade this pullback, right? So how does price move? Well, price either makes high highs and high lows, like so. So this being a high high, this being a high low, this being a high high, this being a high low, etc., etc. Or it's moving in the opposite direction, i.e., it's making lower lows and lower highs. So these are the lower lows, or these are the lower highs. We know that once price actually makes this low, it's actually going to pull back. We can see that as a repeated pattern, and that's how market structure moves. As soon as that pullback is made, obviously we don't know when the pullback is going to be made. We can use our other concepts to understand when that pullback is going to be made, and then we can take shorts in the pro trend. You might be asking, like, how do we actually understand when to take these shorts? And it's very, very simple. We now jump onto the 15-minute time frame and we look for the 15-minute to break structure to the downside. Price is fractal. The 15-minute is going to follow the 4-hour. The 5-minute is going to follow the 15-minute. The 4-hour is going to follow the daily. The daily is going to follow the weekly. The weekly is going to follow the monthly. Okay, so we can see this is the pullback. And the second we get a break of structure to the upside, which is what we can see over here. It's a break of structure because price closed above it. If I zoom in, you'll be able to see that. The second price closes below, we get this particular break of structure. We can call that our 15-minute break of structure. we can now start to look for shorts. And these shorts are going to be very, very high probability. And we can combine it with a DR and IDR. Well, what can we see? Well, we can see a huge institutional point over here, an institutional supply zone. What does price end up doing? I'm not going to reveal the exact entry model, but we end up sweeping liquidity over here, and then price ends up moving bearish. Why? Because now 15-minute is bearish, 4-hour time frame is also bearish. So with our expectation, if the 4-hour is bearish, our expectation, remember this graph that I drew out for you? Our expectation here is that price is going to pull back, create that pullback, and then it's going to break structure. So that is where we expect price to go, break that structure. So once we can actually understand that, we can also apply that to the 15M. The 15M is going to do exactly that. So we get price pulling over here. It's made our pullback. We can jump onto a lower time frame. I'm not going to reveal the exact entry model that I use, but we can place our stop above that. The way I would do it is I would identify an institutional zone on the 1M, and I would take a trade targeting this over there, targeting the actual break of structure. So now we understand that our 4-hour is in alignment with our 15-minute time frame. Our 1 minute is also in alignment with the 4-hour and the 15-minute. We can actually take a trade. We can actually start to look for shorts. And on top of all of that, we're using the DR and IDR as that extra bit of confirmation to tell us price is continuing to move bearish, right? We can see the DR IDR in this case has been bearish. We then get price pull back, continues moving bearish, allow it to separate a little bit, and then as soon as price pulls back, taps that point of interest, that supply zone, we can start to look for shorts. And in this case, you'll see I could easily get a 1 to 3R. Me personally, I always say you have to have a minimum risk to reward of at least 1 to 2.2, 1 to 2.3. I target a 1 to 3. Once you understand that price is fractal, this is how the 15M moves, right? And then it will break structure and move to the upside, right? That one bearish leg over here on the 4-hour time frame is a series of legs on the 15-minute time frame. Once we understand that very, very simple concept that price is fractal, the 15M is going to follow the 4-hour, the 4-hour is going to follow the daily is going to follow the weekly, etc. That is when we can make such good decisions based on where price is going to go. I'm going to show you another example. We make the low here, and now we've pulled back. We don't know where price is going to pull back to. This is our new DR idea. I'm going to mark out the entire thing. This is my huge institutional zone. As soon as price taps in, causes a change of character on the 1 minute time frame, I can start to look for shorts, and I can place my stop above where the change of character is, or above a fair value gap there, or above a point of interest. And I can easily target the low, which is going to be this one over here. Why? Because we know it's here. Why? Because price has already pulled back. So obviously we'll be able to see the straight line going out of this. We can target that straight line for 1 to 3 risk to reward. And now, if we look, these are DR IDRs literally right after each other. I'm not going to make this video too long. If you have any questions, go ahead and book a completely free Calendly call. Stepped out of the education game for now. I'm taking on very, very few people instead of doing entire mentorships. What me and a very, very good trader in the space have started doing is doing 5 1.5-hour sessions from 0 to hero. Essentially, by the end of the 5 sessions, you'll know exactly what to do, how to trade the exact strategy that I trade, and then you can apply it to prop firms at a much discounted rate. If you have any questions, you can book in a completely free Calendly alongside myself. Link is going to be in the description. Apart from that, I hope you've enjoyed this video and hopefully it's been valuable. That's it from me, and enjoy the rest of your day.